Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. What else could we discuss today except the Great British Pound? Because today there's a major topic on the markets, the voting in Scotland, and looks like the no camp wins right now. So when the policy pressure has decreased, now is time to speak and take the rational view on what we have right now on the Great British Pound. To be honest, guys, yesterday I wasn't able to sit on my hands and take just small, very small position, mostly just for interest. So by the interest, what will happen? My stop was really far, and because its position was really small, and in fact it doesn't carry the significant financial impact to me, depending even if stop will be triggered. But anyway, the major idea was yesterday to place the stop below the oversold by the close price. So you know that you could draw the indicator, overbought, oversold indicator by the close price, but you also could do this by the low price. And what is the attractiveness and what is the feature of the oversold indicator by the low price? Because when the oversold indicator is based on the low prices, you can understand that this is extreme point, and this even lower than just the simple oversold, and the market just can't pass through it occasionally. And the reason why market could trigger this stop could be the voting yes. So if the Scotland would say yes, in this case probably the stop will be triggered. In all other cases, despite the possible volatility on an announcement moment of the results, the stop hardly will be triggered. So, and why I have taken this position at all? Because I have the experience that very often the technical pictures foresee the possible results of the fundamentals, and not just the results of the known fundamentals, but also the technicals could foresee the fundamentals that will be released on the markets, but you do not know what fundamentals will be released. Sometimes some breaking news comes or something of that sort. And particularly speaking to the Great British Pound, if you'll take a look at the monthly chart, you'll see that in fact market has formed a nicely looking bread bottom buy pattern. Because this low is not just the low, that is the major 3.8 fib support on the monthly chart. That's also the reason why you should take a look at the higher time frames, just to see where you are in the big picture. And when you know that this is in fact this move down is the huge bread bottom buy, you understand what result it could be, because you know that the bread bottom suggests the retracement right back up to the 618 resistance. That's, guys, by the way, the medium-term target of this move up. It's 167.55. And this retracement is possible only in a result of no voting to the Scotland freedom. Because if Scotland would say yes, you'd not see any retracement up, the market will continue to move down. That's simple. And I just take the position, assess the risk and take the position. It's very small lot based on this purpose. Well, what conclusion we could make on the big picture? The major conclusion is that bread bottom in progress on the monthly chart, and the target of this bread bottom in the medium-term perspective stands the 67.55. It is this fib support, fib resistance. It absolutely doesn't mean that market will stop here and turn to the downside. It's just the minimum target, the most probable target that market should hit. What will happen after that? Anything could happen. Maybe market will continue to move up. But for the technical purpose, we mostly interesting with this level. That's exceptional level for us. But at the same time, as you can see, market has formed another bread body in the opposite direction. It maybe doesn't look like the absolute and pure bread body by the letter of the Giordano framework, because you can see that the major fib resistance was hit 164.86 on the 1, 2, 3, 4, 5 on the 6th session. But you should understand that this has happened mostly due to the political pressure that prevents market for the normal speed, more normal appreciation to the upside. But by these market mechanics, this is absolutely the bread and butter sell, because we have the very strong thrust down, even with the gap down. No significant retracements, no even 3-8 retracement with this thrust. That's very cool. Second, market has reached the major 618 resistance also very fast. So 164.86 area was hit. Since this previous momentum was really strong, we could assume some deep retracement to the downside, but that will be only the retracement on the way to the 167.55. That's our medium-term trading plan for the Great British Pound. First, retracement here. Second, upward continuation to the 67.55. That's our view on the Great British Pound. Also, guys, the additional resistance is provided by daily overbought. So you can see that market is overbought at the daily chart. So we have some combination of the stretch pattern right now on the daily chart. So if we add another bound here, we see that approximately the target by the stretch framework will be around 62 area, the middle between the bands, the overbought and oversold, right? Somewhere on this area. What else we have? On the 4-hour time frame chart, we see another reason why the retracement could start, and that is the completion in inner ABC bottom pattern, 1618 target. So that's on the daily chart. It's not just the overbought at the fib resistance. That's also an agreement. So this inner ABCD pattern. The target of this brand body will be 62.32 area. That's the target of this possible retracement. The retracement probably will be deep, mostly due to the, as I said, momentum to the downside. That will be the first target that we will be watching for. Now, how it's better to trade this setup? Well, there are two possible ways. So if you think that this patterns and situation is enough for you, I mean in the terms of the context, because that's really not bad context at all. Overbought, brand butter sell right at the fib resistance, completion of this ABCD target. So market currently has no reason to show any Russian resistance of this type because this target has been completed. We could suggest that market could show some another leg up if market hasn't quite reached the 1618, but market has touched it. And that's why it could show some retracement here, but it should not show the significant move above this area. So if you think that the context is significant enough for you, so you could try to take the short position. If you would like more guarantees and more confidence with the possible retracement, then your choice is to look at the hourly chart. What we have on the hourly chart? On the hourly chart, we have nice thrust up. That could be a reason for the some reversal pattern. So, other words, if you would like to justify more the possible short entry, you need to get the reversal pattern on the hourly chart. What pattern it could be? I can't exclude that this could be the double repo sell. That's also possible on the Great British Pound. Maybe market will form here some sort of the butterfly. Some small spike above this top also could happen. I do not know. But you should wait. If you would like to get more confidence, you should wait more confirmation. You need to get pattern on the hourly chart. But in general, guys, I suspect that we should be ready for particularly this price action. First, retracement to the 64.30. That also corresponds to the target of the stretch pattern on the daily chart, and that is the target of this brand butter sell on the daily. And second, reversal to the upside and action to the target in terms of the monthly brand butter buy That stands at 67.50. That's our medium-term look at the Great British Pound. Let's see what will happen.